Good morning, student. So we have completed two chapters. First is the introduction of accounting and second is the basic terms of accounting. Now, today we are going to discuss about the accounting principle chapter 3. This is the most important because while we are doing the accounting, we need to know the accounting principle because we are following the rules while doing the accounting. So, what is the meaning of accounting principle? Accounting principles. Accounting statement disclose the profitability and solvency of the business to various parties. Accountancy statement disclose the profitability. It means when we prepare the accounting statement, it disclose the profitability and solvency of the business to various parties. It is therefore necessary that such statements should be prepared according to same standard language and set rules. These rules are usually called generally accepted accounting principle, that is GAAP. It means when we are preparing accounting statements, so that time we must follow the rule and standard language, otherwise it will be very tough to understand. Suppose that every state, every country doing a different accounting standards, maintain the accounting standards, so that time that will be very tough to understand. So the accounting principle said every businessman maintain the accounting in a systematic manner, in a standard language and set of rule. So this is all about the accounting principles, and we also said that generally accepted accounting principle, that is GAAP. What are the features of accounting principle? So feature of accounting principle, first is a this is the uniform of rules, second it is man-made, and third is a flexible. How? Accounting principle are uniform set of rules, accounting principle are man-made, and accounting principle are flexible. So these are the feature of accounting. This principle is a uniform set of rule, and this principle made by the human, and this principle also a flexible, not rigid. Sometimes or time to time it will be manage, or according to their work they are just managing the principles and rules also, not principle, rules also. So that is the reason we are saying the principle, accounting principle are flexible. Next, that is GAAP criteria. GAAP, it means generally accepted accounting principles. So there are three criteria the principle said. First, the accounting will be relevance, objectivity, and feasibility. What is the meaning of particular relevance, objectivity, and feasibility? So meaning of relevance, it means when we calculate and take and get a result, so it will be useful for the business. We will get a information and get a result, so it must be useful for the business. So that is the relevance. What is the objectivity? It means it will be free for personal biasness and judgments. And feasibility, it means when we prepare on when we maintaining the accounting, it must be simple and cheap cost or low cost, not be too much cost maintain while preparing accounting, and the accounting will be very complex. So what is the relevance? A principle is relevant if it result in information that is useful to the user of the accounting information. Okay, result in information that is useful for whom? user of the accounting information. What is the objectivity? A principle is objective if it is free personal bias or judgment of those who furnish the information. Okay, so objective, what are the objectivity? So the gap just want the every businessman who are preparing, who are maintaining accounting, so it must be free for personal judgment and biasness. And feasibility, a principle is feasible if it can be if can be applied without under complexity or cost. It means feasibility, it means that when we are maintaining accounting, so it must be simple, not complex, or it will be cheaper cost, not will very much cost. So this is the criteria: first relevance, objectivity and feasibility. Now come to the what are the kind of principles, or what are the types. So mainly in major way you can say there are two types of principle. First is a accounting concept or assumption, and second is a accounting convention. So convention and concept. Convention uh, is a thought, and it's a historical thought, and we are carrying day to day. So this is the convention. And accounting concept or assumption, this is the concept we are following while preparing the uh, accounts. So there are two types of accounting principles: accounting concept or assumption and accounting convention. So first we are going to know about the accounting concept assumption. So in accounting concept assumption there are three major types. First is the going concern concept, consistency concept and accrual concept. Going concern concept, it means the business thought it the businessman thought the business will run in future. Consistency concept, it's assume, or it is maintaining the accounts in a systematic rule, a systematic maintain the standards. So and method followed day year to year. And accrual concept said all the transaction must be recorded in accounts. Maybe it will not be related to the cash, but we must to record all the transactions. Accounting standard 1. As per accounting standard issued by ICAI, Institute of Chartered Accountants of India, there are three fundamental accounting concept or assumption provided by the ICAI, Institute of Chartered Accountants of India. So first concept, that is going concern concept. As per this concept, it is assumed that the business will continue to exist for a long period in the future. So going concern concept said that it is assuming that the business will continue to exist for a long period in the future. The transactions are recorded in the book of the business on the assumption that it is a continuing enterprise. All the transaction recorded, they are assuming that the business will run in the future also. So this concept is saying that the business will run in continue. Why? because of this concept, going concern concept. Next, that is consistency concept. This concept states that accounting principle and method should remain constant from one year to another. So, consistency concept what said? That said the accounting principle and method should be same year to year. This should not be changed from year to year order to enable the management to compare the profit and loss account and balance sheet of the different period. Okay, and order them the management to compare the result with another period. Okay, and draw important conclusion about the working of the enterprise, and take out the conclusion about the working of the enterprise. So the concept on consistency, that is saying that always accounting maintain in a set of principle and set of rules, and calculate the profit or balance, take out and make a statement and compare with the another period, and uh, take out the conclusion about the working of the enterprises. So this is all about the consistency concept. And next, that is accrual concept. This concept related to the transaction. In accounting, accrual base is used for recording of transaction. Okay, so based is recording of transaction. It's provide more appropriate information about the performance of business enterprise as compared to cash basis. Accrual concept applies equally to revenue and expenditure. The transaction will be revenue or the transaction will be expense. Every transaction will be recorded according to the accrual concept basis. It may be not related to the directly, not related to the cash. So there are, we just learn the basic types of accounting concept, that is three. First is a going concern concept, consistency concept, and accrual concept, given by the ICAI, Institute of Chartered Accountants of India. Okay, next, some other accounting concepts are here and we must know about this. First is a business entity concept. What is the meaning of business entity concept? This concept said that the business is a separate entity and the owner is a separate entity. That is the reason we are writing the capital in the liability side, because the business thought this is the liability, the owner investment, and the business will pay this amount in later. So this concept said that business entity concept said that the business is a separate entity and the owner is a separate entity. Next is a money measurement concept. This concept said all the transaction must be measured in a money, not a other unit. Sometimes we purchase a liquid material, so this is measured in a liter. Some product measured in a kg, then gram, ml. So this will be very tough to manage in accounting. So this concept said that all the transaction must be measured in the money. Accounting period concept. This concept said that accounting maintain a accounting period. It means the accounting period will be start in 1st April and end in 31st March. And the calendar year is a different. The calendar year start in the January 1st and end in the 31st December. So we are preparing 1st April to 31st March. This is the accounting period. And how the this concept is come according to accounting period concept. Next, that is the historical concept or cost concept. All the product or all the assets must be recorded in their cost at the cost price. Okay, so always we are maintaining our record in the cost price, and also we are calculating the depreciation or another things in a cost. Next, that is dual aspect concept. Dual aspect concept said that the every transaction affect two side. Debit side, if we will write in debit side, so definitely another things will come in the credit side. So this concept, it means dual aspect concept said the every transaction affect two accounts. And matching concept, this is very important in the business. We can take an example. Suppose that we are purchasing a machine that is the 5,000 each machine. Okay, it means the total cost of machine that is 25,000, and we sell a three machine, that price each machine is 8,000. Okay, so we are selling and we get a 24,000. When we are maintaining the account, so we just calculate, we purchased these machines in a 25,000, now we are selling in 24,000, so we get a loss. But this is not a true. Matching concept said you also search what how much quantity left in the business. So we are only sell a three machines, two machines also left, it means it cost is 10,000. Okay, so when again we are calculating according to the matching concept method, so we will get a profit. How? Because the cost of three machine, that is the 15,000, and we sell the machine in a 24,000, so how much money we will get? That is 9,000. So this matching concept said always match the things, and then after you will calculate the profit. And last is a objectivity concept. So this is all about the some accounting concept, but we are going to discuss more about this topic. Business entity concept. According to this concept, business is u- treated as a unit, separate and distinct from its owners, creditors, managers, and others. In other words, the owner of a business is always considered as distinct and separate from the business he owns. So this concept is saying the business is another entity and the owner is another entity. Next, money measurement concept. Only this only those transactions and events are recorded in accounting which are capable of being expressed in terms of money. An event, even though it may be very important for the business will not be recorded in the books of the business unless its effect can be measured in terms of money with a fair degree of occurring accuracy. So this is all about the money measurement concept. And next, accounting period concept. As the business is intended to continue identity for a long period, the true result of the business operation can be as ascertained only when the business is completely owned up. Cost concept and historical concept. According to this concept, an assets is ordinarily recorded in the book of accounts at the price at which it was acquired. It means cost price. This cost is become to basis of all subsequent accounting for the assets. Since the acquisition cost relates to the post, it is referred to as historical cost. It means always the assets will be recorded in the cost price according to this historical cost concept. Next, that is dual aspect concept. According to this concept, every business transaction is recorded as having a dual aspect. In other words, every transaction affects at least two accounts. If one account is debit, any other account must be credit. The system of recording transaction based on this principle is called as double entry system. We also discussed this. One more concept here, that is revenue recognition concept. Revenue means the amount which is added to the capital as a result of business operation. Always the revenue will be added in the capital. How to calculate revenue? So revenue is earned by sale of goods or by providing a service. Concept of revenue recognition determines the times or the particular period in which the revenue is realized. So this is also determined, it means revenue determined the times and particular period in which revenue is realized. So this is the revenue recognize or realization concept. Next, that is matching concept. This concept is very important for correct determination of net profit. Also, we have discussed while we are calculating the profit. According to this concept, in determining the net profit from business operations, all costs which are applicable to revenue of the period should be changed against that revenue. Okay, so this is all about the matching concept, and this is the last concept, that is objectivity concept. This concept requires that accounting transactions should be recorded in an objective manner, free from the personal bias of either management or the accountant who prepared the accounts. It is supported by verifiable documents and voucher such as cash memo, invoice, sales bill, pay in slip, correspondence or agreements, etc. This is the about of objective concept. Next and last for today's class, Now we are going to know what are the difference between accounting concept and accounting convention. Basis of distinction. Legal position. In accounting concept have legal acceptance, but accounting convention are guidance based upon customs or used or generally agreement. So this is, there is a no legal position in accounting convention. This is the follow the customs and sometime use or use generally agreement general agreement. Okay, next, recording versus financial statement. Accounting concept are the basic assumption on the basis of which transactions are recorded and accounts are maintained. But in a accounting convention are followed in preparing the profit and loss account and balance sheet. Significance. In accounting concept, these are the uniform set of rules usually followed in recording the transaction. Also we know this is the principle, so definitely we will follow the set of rules. In accounting convention, these are not so important as the accounting concept. Next, rule of role of personal. In accounting concept, there is no role of personal judgment or individual bias in following the accounting concept, because here is the set of rule. But in accounting convention, personal judgment may play a crucial role because we are following the customs. In the adaptation of accounting convention, uniform uniform adoption. In accounting concept, there is uniform adoption of accounting concept in different enterprise. So all the enterprise follow the principles and rules and they are following the same languages. So this is the uniform adoption. But the convention, there is no uniformity in the adoption of accounting convention in various enterprise. So this is all about the today's class. We learn and we know what are the accounting principles. So there are two types of accounting principle. First is the accounting concept and second is the accounting convention. And next day we will discuss about the accounting convention for more clarity. And today we only learn about the accounting concept. There are three major accounting concept, that is going concern concept, consistency concept and accrual concept, and any and more other concept we have discussed. And we also discussed what are the difference between accounting principle and accounting concept. So thank you everyone. Please like, subscribe and share the video.